We have seen horrible headlines about the housing market, sometimes even conflicting stories in the same day. So let's share the actual data from this year and see what you can expect in 2024. Today, we're diving into the latest trends nationally and here locally in Florida, focusing on inventory, interest rates, and their impact on buyers and sellers. There's a lot of clickbait out there and conflicting news stories, so it can be difficult for a person to decipher what is actually happening. So I listened to the experts like Brian Buffini, Lawrence Yoon of NAR, and some of our local experts like Stewart at Distillery, so we can break down the data to see what it is telling us in hopes to bring you real and honest information. Let's look at the national market data. We all know the rates have risen significantly this year, which attributed to the sales decline nationally and locally. While sales may be down, potentially reaching the lowest level since 1993, home prices have remained resilient due to low supply. The market has been facing a significant housing unit shortage, and this shortage contributes to the sustained higher home prices. Affordability has become a real issue in this country. Rates went from 2.65% to 8% in 2 years. That shocked the real estate industry. Rates are absolutely affecting the market, and we are all experiencing this everywhere, resulting in lower buyer activity and homeowners not selling their homes. The economy is starting to slow while inflation remains above the Fed's 2% target. However, there is a lag with this, so it may take some time for things to settle to see where this number goes to before the Fed starts to drop the Fed funds rate. So we may not see them cut rates until the second quarter to mid-2024. Most experts predict that sales volume in 2024 will be the same as 2023, but another expert I listened to, and he's usually right, is expecting rate cuts mid-year, contributing to a very strong end of 2024. He believes this because even though the Fed hasn't cut the rates, the bond market is trying to predict what the Fed will do. So they have anticipated that the Fed will continue to drop rates, maybe 3 to 4 times in 2024, which is why we are seeing a downward trend in the mortgage rates since the high in October. The other reason is the builders have already bought down the rates in 2023 as incentives for buyers, which has been a huge driving force for the sales last year. So the builders are predicting the same. One thing I wanted to share was an interesting news story from the early 80s that Brian Buffini shared. He's been in the business almost 40 years, and this video is from 42 years ago where the evening news shared a housing market update because the rates were very high at 17.08%. So they interviewed some people on the street, and one person said that, if you have to buy a house and those are what the rates are, what are you going to do? The next person said the same thing, and she said, I don't know if we will ever see 11 or 12% again. So if we could get 15%, that would be great. It's not word for word, but you get the gist. So there you go. Rates do not seem so bad, do they? And that lady that would love 15% didn't think the rates would ever come down. And look where they went to. So let's talk about the inventory issue, because a lot of people think we're going to see an influx of foreclosures, more homes coming on the market, resulting in prices coming down. I met with a couple that would like to sell their home the other day, and they're watching all this news that makes them feel like it's doomsday. They think that there is going to be a lot of people out of jobs, people losing their houses, lots of foreclosures coming on the market, which is ultimately going to affect the sale of their home. Well, unemployment is low at 3.7%. The historical average is 5%. Employment drives housing. So most homeowners have equity. So no data points to an influx of foreclosures like we saw in 2008. As for an increase in inventory, new construction has been a driving force for the sales in 2023. Builders can create the momentum by building inventory and, more importantly, buy down the mortgage rates, which is what they have been doing, at or below 6%. So new construction will continue to lead the way this coming year. As for other expected inventory, we are expecting the existing home inventory to increase in 2024 for a few reasons. In the last 2 years, there were 7 million new babies born and 50 million job switches, and that typically leads to a home purchase or a relocation. So there should be more inventory in 2024, but we have about 45.5 million millennials that are waiting on the sidelines to buy their first home. So this will continue to put pressure on inventory. Currently, there is nothing in the data that shows there will be a flood of sellers to the market. So it's expected to follow the pattern of a decline in rates will be a decline in inventory. So some buyers may be waiting for lower rates, but just know that means more competition and less selection if you do. That might be the right strategy for a lower initial payment, but on the other hand, maybe the strategy should be to get into a place at a lower price and refi later before the other people thinking the same way as you get into the market. That's just some food for thought. Now, the good news is sellers are adapting to the reality of higher interest rates and pricing accordingly, which is contributing to more sales. We're seeing new listings go under contract quickly, indicating strong buyer demand. So we can expect this trend to continue as we get more inventory coming on the market, especially if the rates continue to drop. So looking ahead, interest rates and inventory will be key. Now, looking at Florida, we saw a slowdown in sales like everywhere in the fourth quarter due to the spike in rates in October, where a 30-year fixed rate hovered between 7.5% and 8%. But let's not forget, last year's rates were above 6.5% and sales were impacted then as well. With that being said, when we compare year-over-year sales, we've actually seen a 2.6% increase in closed sales of single-family homes. The townhouse and condo market experienced an increase as well. In Florida, the landscape is changing a bit for buyers, with a rise in new listings compared to last year. Active listings for single-family homes are up by over 14%, and townhouse and condo listings have soared by nearly 26%. These new listings have brought inventory levels in Florida to a 4-month high. While inventory increases typically slow down price growth, we haven't seen a significant impact yet. For November, the median price for single-family homes in Florida rose to $413,000, a 3.3% increase from last year. Townhouses and condos saw larger growth, with a median sale price up by 7.5%, reaching $330,000. When looking at median days to contract, homes are taking about 30 days to go into contract. So if your home has been sitting for 2 months, it is likely priced too high. As you can see in this chart, in Northeast Florida, 73% of sales in November closed in the first 60 days, with more than half of the closings in 30. The properties that are sitting are contributing to the increased inventory levels, so they have become stale. So sellers, if your home has been on the market for over 60 days, it may be time for a price reduction and a marketing refresh. In St. Johns County, we saw the median sale price of single-family homes drop by 2.6% to $510,000, still higher than the state median price of $413,000. Overall, home sales within the county are up 15.6%, telling me that buyer demand remains strong. Homes are selling at 97.3% their list price, which was up 1.6% from a year ago. So sellers that are coming on the market are being more realistic on pricing. Inventory in St. Johns County is up 42.9% from a year ago to 4 months. So there are many more options for buyers right now. Much of it is new construction. In November, 26% of the closed sales were new construction. And new construction inventory and incentives drove sales and will continue to drive inventory in 2024. If you are selling a home and competing with new construction, you should know that the average new construction concession was $13,000 and the average seller resale concession was $8,700. So if your home is near or in a new construction community, you will be competing with their incentives, and you need to consider this when listing your home. I did a video sharing ideas on ways to compete with builders. I'll share it in the description below so you can take a look, and also at the end of this video. Of course, I'm here if you have any questions. Looking into 2024, with inflation coming down and the Fed signaling to the market that they are done hiking the Fed funds rate, what can we expect? We saw prices rise with mortgage rates in the 7s and 8s. So what do you think will happen when the rates come down into the 6s or 5s? Prices should go up. The experts I follow for my research study the past to predict the future. They have been in the industry for decades and have seen it all. They've seen the patterns. So in 2024, they are expecting a tight first quarter, more activity in the second quarter, which would be expected since it's spring, but it's going to get busy in the second half of the year. Rates are expected to come down, and these particular experts are predicting below 6% by the end of the year. Lower rates should bring new inventory to the market. There's pent-up demand to sell. Homeowners may love their rate, but they do not love their house. So we should see more seller activity when the mortgage rates become more favorable. Add the existing buyer demand, and we have the potential for multiple offer situations in 2024. So buyers, expect more options in the second half as well as more competition. And sellers, if you are listing your home, you have to price it accordingly. Otherwise, your listing will become stale. Buyers are not looking to overpay like they did in some areas back in 2022. As we navigate the ever-changing landscape of real estate, remember that we can break down the data in Northeast Florida to a specific area, zip code, and community. Every market is different and it's very local. If you are thinking of relocating to St. John's or Flagler County, I have included my relocation guides below in the description. Sellers, here's that video to check out if you need some marketing ideas when competing with a nearby builder. It's important to stay informed so you can make an educated decision. We are here to help with your real estate needs and questions, so please don't hesitate to reach out, comment below, shoot me an email. Thank you so much for tuning in, and I will catch you next time.